So the next question says, which sentence best describes a regressive tax? One says, regressive tax places a higher burden on people who earn less compared to wealthier taxpayers. 2 says, regressive taxes place a higher burden on wealthy taxpayers compared to people who earn less. 3 says, regressive taxes result in poor taxpayers paying no taxes. And 4 says, regressive taxes prevent tax rates from rising over time. And so, again, this is a very definition-based question. And so the question asks us, what is a regressive tax? And so regressive tax is basically the opposite of a progressive tax. And so this is, progressive taxes are what we see in the United States, where you have tax brackets and the lower income people are going to pay a lower percentage of tax, maybe 10%, whereas as you move up in income and you get placed in higher and higher tax brackets, the more money you make, the more money you pay on the marginal income that you're making. So if you are a millionaire, then the last $200,000 you make might be taxed at 50% rather than the first $10,000, which was taxed at like 10%, right? And so that's what we call a progressive tax rate. The regressive tax is going to flip that, and it's going to place a high burden on the lower income people and say the lower income people must pay a 40% tax rate, and as you move up in income and move up in tax brackets, you're going to pay less and less money in taxes. And so that's going to be what we're talking about when we talk about regressive taxes. And so whereas income tax is going to be a progressive tax, Social Security tax is commonly known as a regressive tax because it places a higher burden on low-income people than high-income people. And so answer choice 1 is going to be our best description of regressive taxes. Regressive taxes place a higher burden on people who earn less compared to wealthier taxpayers. And so we can look at the previous tutor's answer choice. The previous tutor also chose answer choice 1. Regressive taxes place a higher burden on people who earn less compared to wealthier taxpayers. And they said a regressive tax is a type of tax that is imposed in a fashion such that the tax rate increases as the income which is subject to taxation decreases. When the average tax rate exceeds the marginal tax rate, as the tax regresses from high income to low income, the distribution of tax on income is considered regressive. In case of a regressive tax, the relationship between the tax rate and the tax rate payer's ability to pay the tax is inverse, and hence the tax burden increases as the income decreases. For example, a lump sum tax is an example of a regressive tax rate as it is based on a fixed amount and not a percentage due to which low income claims a higher proportion to tax. Yeah, great answer. Really covers the definition and gives a good example. A lump sum tax is a regressive tax, and so we can mark that as correct.